Looks like Tesla's making some very big moves across the board to boost up sales of its vehicles. We'll play a clip from Elon Musk that he made in the past saying how he much prefers volume sales to margins. Tesla just now introduced 0% financing for Model 3s and Ys in the US. We'll show you the details of those promotions. Second, the Tesla referral program has also been changed, now reduced from $1,000 to $500 if you refer someone to buy a new Tesla. Third, Tesla has increased discounts for cars in inventory in the US to as much as $4,000, up from $2,500 on Model Ys and 3s. Fourth, software code in the Tesla app has been found that shows that they're working on reverse summon, allowing you to send your car off to find its own parking spot. Fifth, Cybertruck is now eligible for free FSD transfer until end of the year. And finally, we'll show you videos of what institutional analysts like Piper Sandler and Dan Ives are saying before the earnings call tomorrow. So we've got Hans Nelson joining us. He's going to help us break all this down apart and find out why they're doing this. Welcome, Hans.
Thanks for having me, Herbert.
Check out Hans on his YouTube channel, Hans C. Nelson, and follow him on his X account as well. So first, let's start off with, I think, a very important piece of reminder of what Elon has said in the past. In a previous earnings call last year, 2023, he said it's better to ship a large number of cars at a lower margin, subsequently harvest that margin in the future as we perfect autonomy. This is an extremely important point. So basically, he prefers volume of cars sold than the margin. Let's listen to what he said.
Taking a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. However, we expect our vehicles over time will be able to generate significant profit through autonomy. So we do believe we're like laying the groundwork here, and then it's better to ship a large number of cars at a lower margin and subsequently harvest that margin in the future as we perfect autonomy. This is an extremely important point.
Okay, he said that a year ago, Hans. What do you think about that strategy?
It is interesting for him to say that and, to reflect on it at this point in time, because, one of the things that a lot of analysts and investors have pushed for was a faster ramp up of the fleet overall. And we've seen kind of a slow walking of that growth. And we have backed off of the 50% annual CAGR growth, although they are forecasting a return to that next year. But that said, there's a lot of different competing things that they have to figure out and they have to get right. And one of the really extremely challenging parts about this is that, when he's talking about executing on robotaxis at scale, then you're talking about having, if they're going to go in on over time, a fleet of cars that has no steering wheel and no pedals, like the Cybercab that they revealed at the We Robot event, then they have to figure out how to coordinate the scale up and then, global deliveries of that platform with regulatory approvals. And that's just really hard to do. And so it's great to just remember that the volume, like the size of the overall fleet, is a very critical point that Elon and the Tesla team are focused on, even though it's hard to understand specifically all of the strategic moves that they're making on that front. But we also know that there's, new vehicles that are coming here in the not too distant future, which are going to, in fact, be cheaper, smaller models. Potentially they'll look like the Cybercab, but will have a steering wheel and pedals. Or, they may be something that's kind of halfway in between the Model 3 and the Model Y and the Cybercab. We don't know for sure yet. But they are definitely thinking about that. And then the other piece to bring in here is the fact that Elon has spoken about in the past that as they, once autonomy is really in the bag, that they plan to essentially operate Tesla at cash flow break even as they really begin scaling up that fleet of Cybercabs, of robotaxis, and they're going to invest aggressively in growing the scale and the production, potentially even owning, some of the fleet themselves. That they are really looking at trying to capture as much profit making capacity as possible, using every spare dime and nickel that they have at their disposal, which will be substantial as they increase the amount of software revenue that they're bringing in.
Yeah. And so we're going to report quite a number of changes that Tesla just made for the final quarter of the year. We're talking like financing rate, inventory cars, Cybertruck, FSD, those kind of things. We'll go through all that today. So first up here is you've got Merit reporting, right? Or so Tesla dropped just last night. It's offering a record low loan rate of 0% APR for new Model 3 and Model Y finance orders in US. You don't need to purchase FSD to get the 0% like they did last time. So this is just North America, 0% APR now available in the US Model 3 and Y. Take delivery by December 31st. So this is just obviously interest rates is critical. They're going to eat it. So there's a slight difference in how it works, but Model Ys, it's for terms up to 60 months, and you do require the 20% down payment. The Model 3, it's only for terms for 36 months, and you do require that 20% down payment. Here's the list now. Model Ys, 36 to 60 months, you get the 0% APR, but if it's 72 months, it's 0.99%. Model 3, Model 3s is 0% for 36 months, and then 0.99%, 1.99% for APR for 60 months. I think 60 months is probably the most common. What do you think about this? This is the most attractive deal they could possibly have, right?
Well, I think that people like Gary Black should be, dancing right now, because this is something he's talked about for a long time. Using, instead of doing price cuts, using actual buying down of the interest rate to make the cars more attractive and more affordable. It does make a pretty large impact actually on the monthly payments that people are looking at making. And so I think this is, an intelligent move overall. I'm glad to see it. And, it also makes more sense now that we're in a cycle of contracting rates instead of expanding rates from the Fed. And I definitely hope to see this making, a good dent this quarter. In the other piece to bring in here is that this is Q4. Q4 is historically very record high season for auto sales typically. And so this is, they're basically putting their best foot forward on trying to make the purchase as attractive as possible in the quarter where they're going to be pushing the most volume.
Yeah. And for me, I think that there's a role for both price cuts and financing buy downs. You need to bring the price cuts so that the price of the, MSRP of the car, the vehicle is compared to the ICE cars and gas cars. And they go, this is the price, this is the price. And once it got to price parity, then you can do these incentives like this to really push sales. You can't just, all of it is just financing issues. So the next thing, of course, is, which is very interesting, I want to get your thoughts on it, is this change to the referral program. So one of the things that Tesla just did was they changed the referral program to make it very attractive. If a buyer, if I refer my friend to buy a car and they click on my link, I can get $1,000 and they would get $1,000 off. But now they changed it that I, as a referrer, would only get $500 instead of $1,000. This is the new change. Why did they do that, Hans?
So one of the things to notice there is that was done in the US. And so, I mean, this is complete speculation on my part, but it seems like maybe they're shifting some money from the referral program over to actually buying down those interest rates. And I'm assuming that if they're doing that, it's because they have the data from the last quarter that says that the interest rate buy downs are actually a more effective lever, and that they get better ROI on doing that, and it is more effective in driving sales than just the referral program. So I think from the referrer and the referee's standpoint, that it's maybe a little bit less optimal, but I don't think the change from $1,000 to $500 on that referral credit is going to make a meaningful difference on how many people are going to use. Like, you're still going to use it. You're still going to talk to people about it. And so I doubt that it will change the conversion rate of referrals hardly at all. But moving that money over to the interest rate probably actually has a pretty significant impact.
Yeah, I agree with you. The other thing they did was inventory discounts. My gosh, they're really going across the board, like I said earlier. Increased inventory. These are cars that are inventory. They've increased the discounts from $2,500 to now $4,000 for select Model Ys and Model 3s. You can apply the new 0% APR promotion to these inventory vehicles, and you can save up to $9,000 in total over the duration of a 16-month loan. These are not the demo vehicles. I just bought an inventory car as well, and they're fantastic. I mean, they're great. Brand new cars. Look at this. You can now see the price cuts here too. So significant discounts. Why did they do this one as well? I mean, do they have more in inventory right now? Is that where they're trying to send them out?
Yeah, I don't know if it's that they have inventory building up. I would assume so. One of the things to remember, and this is a point that Rob Maurer was always really good at making, was that there are not necessarily demand pockets that are global, but they can have them locally. That, maybe they have too many vehicles in one specific region, and maybe it's just easier to offer discounts on those cars than it is to potentially transport them from a place that ended up having too many Model Ys or too many Model 3s to a different location that maybe the sales are actually doing better. And so they do have this inventory management challenge where, they're making predictions, they're sending cars to places, and then if the sales don't end up matching perfectly with expectations, then they might have a little bit of excess inventory in a specific location. I think that's why, it's at up to $4,000. Like, it's not going to be $4,000 off of every inventory vehicle. I would not expect. But in areas where they do actually need to move some metal, then they can use that selective extra $1,500 to help make it a little bit more attractive to get those in. Maybe it makes sense for someone to drive further to get that specific vehicle than one that's closer to them, because the pricing is more attractive, or there's a number of different scenarios where that just helps them. And one of the things that I just trust management to know when and how to use that pricing to optimally provide results to the company.
Okay, well, it's they didn't just leave it to all those cars. They also did something with the Cybertruck also. So now the Cybertruck is eligible for free FSD transfers until the end of 2024. So it wasn't eligible before. Tesla changed the rules today. I mean, it makes sense now that FSD is available in a Cybertruck already. This means you can transfer FSD for free to a new Model S, 3, X, or Y, or a Cybertruck if you take delivery by December 31st. So now it's across the board, right? So if you want to buy a new vehicle and you own FSD already, you can just transfer it to that new vehicle, including the Cybertruck. Now, why did it take them so long to do this? I guess they wanted to just wait until they know for sure FSD and Cybertruck is working well.
It could be that. I'm sure that plays into the decision to an extent. But the other thing is just Cybertruck really being at a point in the overall ramp where they, it doesn't surprise me that this also coincides with them moving off of foundation, that they're really kind of exhausting the very highest end of the amount of demand for the Cybertruck, the people that are willing to pay almost $100,000 for this truck. And so now that they have kind of sold through as many foundation series Cybertrucks as they can at full production capacity, now they have to bring the price down and they have to start offering some more of these little incentives like this. And so I think we'll see, potentially more things like this moving forward. And overall, I think that is a good sign for the volume that Cybertruck is going to be moving into as well.
Yeah. So they're pulling out all the stops, trying to, increase the volume. We played you that clip earlier, why he's doing that. Meantime, they're continuing to improve the software. This one I'm very excited about. I don't know if you saw this, but in the Tesla app, as you look at the Tesla app, a lot of organizations there look at through the software code, and they noticed that in version 4.38.0, look at this. Not only is there a Tesla watch, that's great, but it's this one, reverse ASS, being worked on. This is actual smart summon is when you call the car to come to you, right? So you're standing somewhere in the parking lot and you go, come to me, and it'll come out of the parking spot, come to you. But reverse is what I think we've heard Elon refer to as banish, which is you park the car, you drop you off at the lobby or whatever at the front of the store and let it find you a parking spot. So they're seeing code there down to the details of where it parked and updates while looking for parking. While it's looking for, still looking. I can't believe this. This is going to be a big deal. I'm very excited about this feature, even more so than Summon. That just is just so cool. You know, like my wife and I go to the supermarket, and often it's like, do I drop her off the big front so that I can go find the parking spot? And I'll say, okay, I'll find a parking. Or we just both go off, let this thing find a parking spot of its own. It's going to be a big saver. What do you think about this?
I'm looking forward to its rollout. You know, first of all, it's a pretty complex feature when you think about all of the things that could potentially go wrong, and they need to have ways to mitigate all of those potential failures. So I'm excited to see it. It's also an important part of the functionality that would be included in a completely, no steering wheel, no pedals Cybercab. And so it is a feature that is both difficult and necessary. And so to see them making progress on it, hopefully seeing it in the hands of customers in the near future, is encouraging on the overall progress of the fully autonomous, level 3 plus level 4 potentially versions of full self-driving unsupervised. And that is something that, like you said, I think will also be a large a reason to purchase the vehicle. Like, that's a huge differentiating factor. Waymo's not gonna be able to provide you with, I guess it's different with Waymo, but there's no other car that you can buy that's going to be able to do something like this for you. So it's it's a challenge, but we've also seen, like, this is something that Ashok specifically mentioned being on the roadmap for October. So we should be expecting to see something like this rolling out very soon, because he delivered on all of his September timelines, and we're now within about a week away from the end of the month for October. And so we definitely know that the engineers in the autopilot team are working very hard. They had the 1010 event and then had to get straight back to work on trying to deliver on the rest of the milestones for October. And like I said, this is a very big, hairy, difficult challenge that they have to solve. And so I don't envy them for the work that they're having to put in right now to try and deliver this to customers. But I can't wait to see it.
All right. So I'm going to go ahead and I'm going to be playing or sharing information of the 3 institutional analysts, what they are saying prior to the earnings call, which is tomorrow. But curious, do you think, Hans, like, why did Tesla drop all of these changes? Model 3, Model Y, financing, referral bonus, inventory, Cybertruck FSD, all of this happening the day before earnings? It's just a coincidence? Is there a reason why they're doing this?
I would say probably not coincidence.
Mm-hmm.
And maybe we'll find out more about why they are, doing all of this right now on the earnings call tomorrow or in the shareholder deck. The overall, though, I would say, just zooming out, this
Mm-hmm.
is, all of these things are still mostly targeted at setting Tesla up well for Q4, and trying to deliver as many vehicles in Q4 as possible. We don't typically have the delivery wave thing as much anymore as we used to, but I think year end is kind of a different scenario, and that they really do want to try and deliver through as many vehicles by year end as possible. And so this is going to be something that helps them do that specifically. And like I said, with the inventory discounts being able to go up to 4,000, I think that's going to be one of those levers that they can use to make sure that they can clear out as many vehicles from the delivery pipeline in places where they kind of ended up, to actually be able to accomplish that. And we might even see a quarter where deliveries in production are closely matched, and inventory doesn't grow. We have already seen one quarter where we had deliveries come in very, very well in comparison to production. We could see that again this quarter.
Yeah. I'm trying to figure this out, right? So if you have improving margins, then the story could be, hey, Q3 report tomorrow. They say, hey, look, the margins have improved a bit. We're going to go and use more of that margin for future. But more likely it's that the margins are compressed, and they're just going to continue that compressed margin, and then they're just going to say, hey, volumes don't matter. It's a story is full self-driving. It's stories autonomy. We want as many cars out there. Let's
one thing to note for people to look at in the expectations for tomorrow is that margins are still relative. This is the auto business, and
exactly. Good point.
Even if we're flat on margins, or mildly compressing, but all of the other auto companies happen to at this point in time all be dramatically compressing, then their relative performance compared to other automakers will actually look pretty good, to a lot of the auto industry analysts. I expect kind of mixed reactions from analysts and from the market this week, but that is something to keep in mind. And one of the things that I'll just keep reiterating and reminding investors and viewers of is that because Tesla has this direct to consumer sales model, and they not only do they have just less days of inventory overall, but also a lot less complexity in delivering vehicles to consumers, they actually are able to convert market trends into proven financials several months faster than the legacy OEMs. And so anyone who's selling through a dealership model, their results are lagging at least 3, sometimes 6, sometimes even 9 months behind what Tesla's showing. And if we go back in time, a few quarters in Tesla's history, we saw a lot of real rough times in the overall auto market. So those are, we've been seeing those types of results now show up in all these other companies. And so that now that Tesla's kind of moved out of that into a position of the auto market for Tesla being pretty stable and at least decent, if not incredible, the fact that these legacy companies are now going to be showing the financial results that resulted from the difficult auto market that we've already passed through is going to make them look better on a relative basis.
Makes sense. Yeah. Okay. Let's take a look. We've got Dan Ives here. He says this: Tesla earnings this week. There are lots of moving parts in the Tesla story over the next year, but ultimately the encouraging China strength seen this quarter will be a linchpin for the bullish Tesla narrative looking ahead. Margins should start to move higher this quarter. This is Piper Sandler. They've reiterated an overrate rating, 310 price target. This is what Alexander Potter said. Tesla will be reporting third quarter on Wednesday, and as usual, we're fielding lots of questions about automotive gross margin. This topic seems especially consequential lately because the recent robotaxi unveiling failed to prompt upward estimate revisions. The stock has fallen by 15% since peaking prior to the event, and the likelihood of additional downside will depend, in our view, largely on gross margin. We expect gross margin to rise versus last quarter, but if we're wrong, the next several months could be choppy at best. Sure. And then let's listen into this guy, Kinahan, JJ Kinahan, and let's listen to what he says.
I think, this is the first one kind of the Mag 7, Netflix being the first one of Mag 7 last week, and now Tesla following it up. Always a lot of excitement around Tesla. From a retail trading point of view, it's always one of the top 3 to 5 names traded every single day. So people really want to see something positive out of them, especially after robotaxi disappointment. One thing I would say to people, though, if you look, even if you don't trade options, one of the things options do well is they set an expectation of movement. And so with that, what we're seeing is an expectation of about a 6% move in Tesla based on their earnings. So again, when you look at it, it's like, are you ready for that kind of move if you're going to trade the stock overall? So I think always a lot of excitement when Tesla reports because of the interest in retail. Elon Musk himself, let's face it, a lot of people buy Tesla as a bet on Elon Musk, quite honestly. And so I think that that's always a big part of why this trades so much also. And we'll see, what comes of the earnings because of that.
Absolutely.
Okay, so basically he's saying that we could expect, according to the options, what's going on there, that 6%, I guess either way, plus or minus, depending on what goes on.
Mm-hmm. Well, I did want to actually go back first to Dan Ives' point about China, that strength in China right now is actually a positive thing for Tesla, but it's actually a negative thing for the rest of the legacy OEMs because their performance in China has just been abysmal. And so that's another, point of relative strength for Tesla compared to everyone else, apart from the actual, native Chinese companies like BYD. So that's another piece to look at and pay attention to. And then as far as, I don't expect, any earth-shattering news tomorrow on the earnings call that would drive something that's more than a 6% change. If so, then, that would be great. And when you don't expect it, it's probably the time when it's the most likely to occur. If they came out with a huge beat on gross margins, either on the back of energy or just overall automotive being stronger, I think that actually could be very positive for the stock and potentially, push more than a 6. The thing about Tesla is that it can be very volatile in both directions. And so sometimes things that seem like they're very small can actually drive large overall movements in the price. But, ultimately, I encourage people to just zoom back out, look at the long term, not financial advice, but the investment thesis I think that makes the most sense to me personally is, what do you think they're going to accomplish in the next 5 to 10 years on autonomy, both with the Cybercab fleet and then with the Optimus bots? And if you're looking at that as your guiding North Star, then the movement in and around these earnings events really are neither here nor there.
Yeah, well, that's what Elon says, right? It's all the cars, not just the Cybertruck, it's Cybercab. It's every Model Y, Model 3, every car sold is going to be potentially autonomous, and this is what is important. So tomorrow at 11:45 Pacific time, I'm holding a live stream. It's going to be pre live stream, the pre-event, and then we're going to do when they drop the financials at 1 p.m. Pacific time, we'll dive deep into that, and then there's going to be the actual event, which we'll co-stream, and then there's going to be the post analysis. Please join us tomorrow. Hans, thank you very much. Follow him on his YouTube channel, Hans A. Nelson. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.